So I got done recording a fairly lengthy episode yesterday, and a little bit after, wow, the market turned from a little bit of green to a massive amount of green. We got a lot to talk about in today's video. I'm going to try to keep this one under 17 minutes. I'm also a little tired. Definitely did not sleep very well last night. So that's definitely going to keep me motivated to keep this video relatively short and straight to the point. Yesterday we got a lot of news basically from geopolitical issues, primarily in the Middle East, resolving around pretty much the Trump administration. Or firstly and foremost, President Trump is expected to speak tonight, April 1st. It is 10 a.m. Actually just turned on my clock. 10 a.m. Eastern Standard Time. So we are going to be getting a statement today. Basically, pretty much is that there is a deadline, a hard deadline of April 6th. The market is also closed for this Good Friday. I'm going to be super duper busy this weekend, and I know a lot of you all too, especially for Easter Sunday, or if you celebrate Passover, you're going to be busy with that as well. Or if you're just going to be spending time with friends and family, because pretty sure the vast majority of stuff is closed on Friday along with the market. But so pretty much in a nutshell, it really does look like operations from the U.S. is going to be dying down in the Middle East. Whomever is really in charge of Iran is basically really signaling, hey, you know, we're coming to like an agreement, pretty much, and things could very well be de-escalating. Not a bad thing overall. Very good that hopefully this is going to be wrapped up relatively soon. So, today we did get some economical data. I want to talk about this really quick. And then I definitely want to give my perspective of this market, what I'm personally doing, going over my public YouTube channel profile here on this channel. I didn't have enough time yesterday, but if you do want to see my buys and sells, I post them on videos. So if you enjoy this video, and if you are a old school metalhead like me, Meatloaf fan, anybody loves Meatloaf out there? I mean, occasionally I definitely will listen to some Meatloaf here and there. Definitely drop a like if you enjoy today's video and subscribe. This YouTube channel is relatively new, so let's grow this organically. My other YouTube channels have one has over 200,000 subscribers. I haven't advertised this channel just yet, so we may be getting a lot of new viewers relatively soon for my daily viewers on these videos, which I really do appreciate every single one of you. And, okay, data, where are you? Got, ADP. ADP jobs actually came in very much better than expected. So basically the previous month, it's definitely showing a better perspective in the market. But once again, the reason why the Federal Reserve is split, and I talked about this yesterday, is that you have data all over the place. 1 month, you have ADP jobs coming in better than expected. 1 month, you have a negative. 1 month, you have practically no inflation. And then another month, you got inflation. It's very hard to really read a lot of this stuff. So the market's going to be closed. Obviously, tomorrow, initial jobless claims is going to be really big too. The big one is going to be the unemployment rate. Even though the market is closed, I'm almost, don't quote me on this, but I'm almost positive we're going to be getting this. I should be able to make a video Friday morning. I'm going to be, should be able to make a video Saturday too. Yeah, Monday through Saturday, I tend to really post videos. Saturday may really be iffy, but definitely should be able to post one on, Friday morning, even though the market's closed. But it's really going to carry over to next week. And if the unemployment rate is just coming in line, beautiful. If it's below expectations, we've all already pretty much priced out a rate cut. So, I mean, if unemployment rate is trickling down, it does cancel out rate cuts. But then in theory, the market has already priced out rate cuts as well too. It's not a bad thing. We are in the craziest market right now ever, where we get good data, the market sells off. We get a little bit of bad data, the market rallies. And then if we get really bad data, the market sells off. It's like 2/3 the friggin' time you can't win, pretty much, right? So, yesterday we had a very much gap up on SPY. Oil is definitely below $100. Yesterday when I was making the video, it was very, very high. Obviously, pretty much came down. The VIX is obviously volatility index, obviously a big push down from yesterday. What is my feel overall? Well, here's the thing about it. Liberation Day last year, I went all in on the market because Liberation Day was a full-blown crash. Obviously we are in a correction, but a lot of people are really arguing we're in a crash because you have different things that have been going on. You have the SaaS apocalypse, you have geopolitical nonsense, you have the Fed pivoting back and forth. It's not like, because last year for Liberation Day, it was one thing and one thing only that led this crash, and that was primarily tariffs. Okay, so when tariffs essentially went away, the market just, fully recovered. And then we soared to all-time highs. The Iran war is one. Back in October, November, when I was very much buying very heavy in the market, and back in October and November last year, I was very much underinvested in the market because I went all in on Liberation Day, and I had a lot of trade positions, and I ended up selling a lot of those trade positions during the summer of last year, and I was just holding a real abundance of cash. Well, I got very much back in to the market during this time period, and I've been buying all the way down. I've been buying all the way down, and I will be continuing buying, especially as we rally up, and especially when we go to all-time highs. Okay, I'm a firm believer in buying in the market, regardless of what is going on. But there is a difference between nibbling on in and then going all in. Okay, very much different. Liberation Day last year, I went all in such as my bank accounts did not have money in them. I depleted my savings, depleted my checkings. I went all in. Okay, I don't trade on margin. I actually have been asked why I don't and why I didn't use margin last year. It's because in my head, there's always the risk. And sure, you could be above 90% that we're going to go higher, but what if? What if that 10% comes true and you lose everything? You got to take that into consideration. But I know people that will use margin and they don't over leverage themselves. Me personally, I'm not there per se in my investing, trading area. And I've been in the market now for over 6 years. Got in during Rona lows. So, I mean, I've had ample amount of time to do margin. I stick to what works for me, and that's really what I advocate on this channel. If using margin works for you, by all means, brother or sister, do what works for you. I'm posting education around what works for me, and I know I'm not the only one with the same type of strategy. Working hard, don't over leverage yourself, and there's going to be times to go all in. And I also do believe that you don't have to build a stock position to an equal 10 to 15%. Somebody did ask me that because on my channel profile here, some of my positions are well over 15%. You can have one single position much larger. I've had a position size over 30% before on my profile. It's not necessarily a bad thing in my opinion. But I'm going to ask the question to you, such as I asked the question to myself, is that position a very great management team? That matters. Okay, so anyways, Liberation Day, very different than what we're experiencing now. Why? Because we have different areas affecting the market. If Iran gets fixed, what can theoretically happen? Well, we could definitely go back to trading in a range. Okay, the S&P 500 has been range bound all the way basically pretty much back to September of last year. So September last year, basically pretty much we've been from the mid, so 650 on this on the SPY all the way to all-time highs near right below 700. So we've been range bound. That is about 8% of a range, decent size range on a major index. Because if the major index goes up by 8%, I mean that's a pretty decent amount. And if the major index goes down by 8%, that's a pretty decent amount going down to the downside. Obviously, this back in November was the government shutdown. That was an issue happening. But the Iran war definitely propelled us to break the 200-day moving average. Now, what else is the problem in the market? SaaS apocalypse, software sell-offs, okay? The Iran war is going to fix oil, definitely. We're probably not going to return to like maybe the 70s, maybe the 60s anytime soon. But we're probably going to get away from the 100 and maybe even the $90 level range, maybe back down to the mid 80s. It's really my guesstimation of where we could be at over the next several weeks if everything clears up. But the major problem still is around AI fears. What about Microsoft? Okay, the top dog of software companies. What about Adobe? Okay, Palantir is very much in a weird mix, but they are theoretically software and they do suffer somewhat of an abundance around fears. But primarily Microsoft, CRM, Salesforce, Oracle is even up there as well too. Oracle has some different stuff going on for them. So software is definitely a major issue. So for me personally, I mean, it's great that Iran is, could be potentially ending, but is it going to fully recover and boost the SPY plus the Qs to all-time highs along with the Russells, or the IWM, I should say, and also recover software? Well, the Iran war is going to get rid of, theoretically, inflation fears of oil. It has nothing to do with SaaS. If anything, maybe the fear of SaaS comes back even more. So, what is going on here? Oh boy, I just clicked on the wrong thing. Oopsie daisy. What is your problem? Hold on one second. I gotta pull up friggin' Weeble here. Okay. Anyways, for anyone who's new to this channel, like I said, welcome. I'm doing a public account profile challenge for education purposes on this YouTube channel. Looking to take this sum of money here to 6 figs in the course of 17 months. I have my own rules, challenges in place. I'm only allowed to deposit X amount of money every so often. And my positions are very much in the red compared to several months ago. Very funny. SoFi was actually well over 120%, but my cost basis on SoFi was only about $4,900. So in the last couple months, I have done what any well-rounded, disciplined investor and trader would do: is you buy the blood, you buy the fear, you buy the dip. And I've been adding to this profile massively. In the last, I want to say 6 months, all in all, I've spent definitely over $50,000 of hard cash between my 2 profiles, one private, one public. And I mean, yeah, that's what you're supposed to do as a long-term investor in companies, or if you are essentially building a trade position. Trade position is definitely anything less than a year, or it could be slightly a little more than a year. When I say long-term, I'm really talking about definitely more than 3 years, maybe even more than 5 years per se. SoFi is definitely a 10-year strategy for me, as long as the management team doesn't change their path. That's very important, okay? If they change their path, like Meta is spending a lot of money, very different. So what is my plan overall? My plan overall is really honestly just sit back. If the market dips lower and we kind of reverse for whatever reason, I'm going to add more positions. If we're not, see if we're going to kind of really get a solid basis of like an uptrend. But understand, like I said, Adobe has been utterly obliterated because of software apocalypse. So my Adobe position is not going to rebound because the Iran war is over. My Robinhood position is not going to rebound because the crypto market is in the tanker. The Iran war is not going to fix the crypto downward cycle. The Iran war is not going to fix SaaS apocalypse. If anything, we may get SaaS apocalypse to return. And maybe that's going to cause the market to sell off even more. So, if you are in the same situation as me and you are holding positions where you were down on and you were once up, you can't predict the future. And I've already had some trolls basically pretty much say, like, you know, a couple months ago all your positions were in the green, you could have sold. That is a dumbass mentality because you're never going to buy the bottom. You're never going to sell the top. And if you try to time the market, which I've done before, you either get lucky, which I have been, or you get your bum whooped, like I have. So it's, once again, stick with what works for you. I have been buying the dip on all my stock positions, and I just started buying Oracle. Probably going to be adding Oracle shares maybe early next week. More shares, even though theoretically my position is already up by 5%, but overall the long-term bet for Oracle is still here. The big thing for this market to really end what has been going on is there's just so much drama. This is actually it's not really like a lot of people are very optimistic right now, but understand that a lot of people really want the market to go up is because a lot of people have gone out and bought friggin' call options, or they are theoretically on margin and they've already like maybe depleted all their cash and they maybe went all in like maybe a couple weeks ago or something around there. This is how you make money in the market. The way you make money in the market is by the market pretty much in a downward cycle, and you continuously buy. Okay, you continuously buy the entire downward cycle, and then when the market starts to go to the upward cycle, hey, you buy that as well. But if the Iran war takes us out of this downward spiral, then it's gonna really show that, hey, maybe the SaaS apocalypse is just very contained in the market, which that very well could be the case. But in my own personal opinion, I think that we have a lot more to get through before this overall market can go to risk on. Because we have the Iran, the inflation oil fears, we have the SaaS apocalypse, which we need to correct. Then we have the crypto cycle, which needs to go back on risk on. And when all these things go away, the market's going to return to being a risk on market. For me personally, and many other people out there, our profiles are going to be just fine. And this is when you really need to remember why you got into the market. I understand it's very fearful and it's scary to see, you know, money going down, especially on your positions, but are you in great management team? The closing final thing that I'll say is back in December, I said, I believe January is going to be terrible. That was actually factual, but I said earnings is probably going to rebound the market. I was wrong. Earnings for January and February for companies were really good, but the market sold off. Maybe earnings next month is going to get us out of this downward cycle. So maybe I was half right. Once again, you can never time the market. Don't try. just stick to your strategies. All right, everyone. I'll see you tomorrow for a new video. Let's hope good stuff comes out of Donald Trump speaking today. Hopefully everything in the Middle East dies off relatively soon. And yeah, stay tuned for more content on this channel. Thank you all for watching, and see you on the next one. Later.